What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. This week gave us a clear idea of who knows what they own and who has absolutely no idea. A lot of people clearly have jumped in on the telehealth boom and FOMO'd into it because of the immense success seen with companies like CloudMD, wellhealth, and Teladoc. But not a lot of people are seeing the bigger picture here. Telehealth isn't dead. It's not going anywhere. So get used to it. And no vaccine will change that. Doctors want more of it, patients want more of it, the government wants more of it, and smart money in the market wants more of it. Everybody wins here. I don't often say this, but I just do not see a downside with this sector. Before we get into the video, anyone who isn't currently part of the Smart Money Squad on our Discord server, you should go join right now. Lots of good dialogue and content in there. The link is in the description below. We'll also be posting on Instagram regularly now, so as well, if you want to hit up @Jayconomics with a follow on IG. So, make that thumbs up turn blue and subscribe if you're new. It really helps the channel a lot. And now without further ado, let's get into the video. Ever since the news dropped from Pfizer, I've seen people concerned about telehealth stocks all over the place, thinking the hype is over. And they may have a point. The unhealthy hype with these stocks may be gone for the time being. But that's what we want. As actual investors who understand what we own, we want to clear out the weak hands and the swing traders that don't really believe in this space. We want to keep the like-minded, long-term investors who share our vision. And let's just clear this up, because a lot of people seem to not really understand what telehealth even is. Simply put, telehealth is virtual healthcare that uses technology as a facilitator. Now, our whole lives, we've had to struggle to make appointments, take half the day off, drive to the clinic, wait in the waiting room for way too long with several other sick people, and then perhaps head to the pharmacy afterwards and wait there too. And then you see multiple specialists, nobody knows what is wrong with you, you have to explain it a million times. It's just so not ideal and such a hassle for the patient. It's not patient-centric at all. Now, telehealth is the great equalizer in this regard, and not only does it benefit the patient, it's a win-win for everyone involved. Now, just because a vaccine would be made available, and this is completely disregarding the fact that we are still months away from this, it doesn't mean that the world stops and that we no longer need healthcare. That's the silliest rationale I've seen in the market in a long time. Now let's take a look at what I'm talking about here. So after the vaccine news dropped, wellhealth briefly went below $7, Cloud hit the $2.20 range, and Teladoc hit the $1.50 range. All three stocks rebounded nicely and it didn't take long. Now that's especially true for Cloud and Well. Both of these beauties are very resilient. Their ability to bounce back immediately is great to see. Smart money comes in quickly and often. Now let's check out their valuations real quick. So CloudMD's market cap right now is $421 million, and their price to sales ratio is at 21x, which is nothing for me for a company of this type of immense growth potential. Now Cloud's current ratio is 4.90, which is current assets over current liabilities. This is a metric, as you know, that I'm a big fan of. And 4.90, that's absolutely fantastic. Analyst price targets have continuously been adjusted as this monster just keeps impressing. I remember buying in at 78 cents for my first buy and the target being around $1.20. Times change quickly now, don't they? Now we're up to $3.45 with a strong buy rating. From these levels, that would represent a 30% increase. wellhealth's market cap is $1.15 billion, and their price to sales ratio is at 23x. Their current ratio is 2.68, which is still very good. They just reported fantastic earnings as well, very impressive numbers, and I'm expecting Cloud to follow along as well. As for analyst price targets for Well, we're at $9.43, also with a strong buy rating. That would represent a 25% increase from current price points. Now let's check in south of the border. What about Teladoc? Teladoc's market cap is by far the largest out of the three, coming in at $26 billion after the merge with Livongo, and their price-to-sales ratio is at 18x. Their current ratio is a fantastic 6.52. And by the way, a lot of people love to look at what Cathie Wood and ARK are doing. Well, guess what? They keep buying Teladoc, and lots of it. It's only the 6th largest position in their ARK-K ETF. Seems really bearish, don't you think? As for analyst price targets, Teladoc right now is at $247, which would represent a 36% increase from current price points. Now, we've been all over CloudMD very early on this channel, and as I've stated more times than I could remember, CloudMD and wellhealth for that matter as well, are both long-term stocks for me in an industry that is only in its infancy. As Dr. Hamza pointed out in our interview together a few months back, we're just at the beginning of the hockey stick type growth. And this is the exact reason that Cloud and Well make up a large portion of my portfolio. Amazon in the early days, Netflix in the early days, online shopping, and streaming. They were both thought to be trends at some point too, and ones that would never overtake their brick-and-mortar counterparts. Well, we all know how that story ends. Amazon is only the second largest company in the world, and basically everyone you know has an Amazon Prime account. Same goes with Netflix. Blockbuster and stores like it went bankrupt, and everyone and their mother has a Netflix membership. The same will be true when we're speaking about healthcare. Telehealth has so many advantages and so many amazing possibilities attached to it. Besides the obvious convenience of not having to spend half your day going to the doctor's office and waiting in the waiting room, it's really the patient-centric ecosystem that has me and a bunch of others excited. If you have a chronic condition or a complicated case, you know all too well that the medical system as it stands currently is a complete and utter failure. When it comes to chronic conditions, the Canadian system needs a massive makeover. I'm going to focus on CloudMD here for a second, but what Cloud is building through their own technology and fantastic strategic partnerships is going to offer that solution and be nothing short of jaw-dropping. Cloud is by far my favorite telehealth stock, and to be quite frank, probably my favorite stock I hold along with Tesla at this time. Alright, so what am I doing? Well, if you haven't guessed by now, I'm very bullish and still very bullish on this sector. I own significant positions in both Cloud and Well and have no plans on selling anytime soon. So, that wraps it up for today's episode. I hope you guys enjoyed the video and that it reminded you of what you're invested into. And if you're not sure, please go do your research. Now let me know in the comments below what your thoughts are on telehealth and which one of these stocks is your favorite. And guys, if this video brought you some value, then please smash that like button for me, as it really does help the channel a lot. And if you want more content like this, then don't forget to subscribe and turn on that notification bell to be notified when any new video comes out. And of course, please feel free to join the Smart Money Squad Discord server. The link is in the description below. And until next time, take care and invest smart.